In recent years, China has been on a gold buying spree, acquiring gold at a record pace. This move is part of a broader strategy by China to diversify its foreign reserves. Historically, most countries have held a large portion of their reserves in US dollars, but China, being the world's second largest economy, is seeking to reduce its reliance on the dollar and hedge against economic uncertainty. China's aggressive gold acquisition serves multiple purposes. Number one, de-dollarization. With ongoing geopolitical tensions, particularly with the US, China is looking to lessen its dependence on the dollar. By holding more gold, China can create a financial buffer and diversify away from dollar-denominated assets like US Treasury bonds. Number two, hedge against inflation. China, like many other countries, is grappling with inflationary pressures. Gold has traditionally been a hedge against inflation, preserving wealth even when fiat currencies lose value. Strengthening global position is at the third point. Holding gold is a signal of financial strength. China's rising gold reserves enhance its position as a global economic superpower and give it more leverage in international trade and finance. As China continues to buy gold, the global demand increases, naturally pushing up prices. But it's not just China contributing to the price surge. Several global factors are at play. Number one, economic uncertainty. Events like the COVID-19 pandemic, the war in Ukraine, and global economic slowdowns have driven investors to seek safer assets. Gold, being a traditional store of value, has seen increased demand during times of crisis. Number two, currency devaluation. With countries printing money to stimulate economies during slowdowns, fiat currencies are often devalued. When currencies lose value, gold, which is limited in supply, becomes more valuable. Inflation. Central banks around the world have been struggling with inflationary pressures as inflation erodes the purchasing power of currencies. Gold has been rising in value as a stable asset. Now, important question, why should we buy gold? Number one, safe haven asset. Gold has been used as a store of value for thousands of years. Countries are buying it. When the economy is in turmoil, the governments are buying it. Is it not? The stock market is volatile or currencies are devalued. Gold often remains a stable asset. It's a hedge against crisis. Number two, protection against inflation. As inflation rises, the purchasing power of currencies declines. Gold tends to maintain its value or even appreciate in such environments. By holding gold, you protect your wealth from erosive effects of inflation. Diversification. Gold is often inversely correlated to other asset classes, particularly stocks and bonds. Including gold in your investment portfolio helps to diversify risk, as it can perform well when other investments are faltering. Long-term wealth preservation. Over time, gold has historically preserved wealth. Unlike paper currencies, which can be devalued by printing more money, gold's supply is finite. It's made by God, and it's a finite material, giving it intrinsic value over the long term. In summary, China's massive gold purchases are part of a global strategy to reduce dependency on the US dollar and protect against economic uncertainty. This move, along with inflationary pressures and global instability, is driving up gold prices. For individual investors, gold offers a hedge against inflation, a safeguard during economic crisis, and a valuable tool for long-term wealth preservation.